Let's just quickly talk about Reliance, Sushil. I got 2 minutes. How were the numbers according to you?
Operational numbers very good. Cash flow of 40,500 crores super. And asset, they flocked to the peak. That is refinery operating at 117%, 69 million tons. Petrochemical at 24.7. And if you look at PBDIT margin division by division, petrochemical and refinery both have fired well. And any stable numbers upward of this in petrochemical would leave the drive because they've invested so heavily. So operationally very good. And the capex of last 5 years would drive the next 24 months of Reliance. And we need to watch how they pan out specifically starting second half of this year and next year. And any positive surprise by Jio post startup on subscriber base as well as on what they earn per revenue per customer would be a kicker to the stock.
Numbers for the last couple of quarters have been strong.
Numbers in last 3 or 4 quarters post GRMs, the refinery margins which were indicative of 15,000 crore previous year, they've earned 23,000 crore plus. If you look at capital employed to profit, what they've generated in refineries in the vicinity of 27-28% plus, whereas petrochemical is still at 15. So any stable numbers in these two directionally upwards would look to a betterment. So assets are flocked very well and they're performing very well. They've done a lot of value addition for future. I understand
So in that light, in that good performance for the last many quarters, what is holding back the stock, you'd say?
I think people are looking for how the new plants are going to emerge. So the capex which is put in, does it generate? No, I'm talking about both. I am looking more at core business. Jio will be a kicker in bigger way. It's like any other bigger company which are making huge cash flow on their basic business and investing in hotels. The similar way here, the cash is earned out of petrochemical, which is at 40,000 crore cash flow this year, looks around 47, 48 next year and 55 the following year. And if you look at PBDIT, it would be in the vicinity of 60 and then 70,000 crores within 24 months. I'm looking at 17 and 18. And that cash being burnt in Jio, but how Jio performs would be a key direction for the future. But right now I would stick to my core businesses of refining and petrochemical to look at my outlook on the stock.
Hemindra, any thoughts on Reliance?
I think while the petrochem and refining divisions have performed well, I think the market would be really waiting to see what about the Reliance Jio launch, because that has taken significant amount of capex, about 150,000 crores, and this has got slightly delayed by analyst expectations. So I think the market is very eager to see when there will be a cash generation from this very significant investment. I think the entire telecom sector is awaiting to see what kind of impact that will have even on the others. So I think these large capex that Reliance has done, and I'm very glad to note that Reliance, of late has been performing well, because for many years it was very flattish. So I think the market really wants to see some success stories in these type of ventures.
Any thoughts on M&M Finance, Hemindra?
I think M&M after many quarters has come out with somewhat decent results. And I would only add that, if we have a good monsoon this year, which is the expectation of some of the geologists or the meteorologists, then this could be another good stock to be in. Because this stock was a very consensus buy, some years ago, but unfortunately it got hit because of the rural slowdown. So I think this would be because the management is a quality management here. So I think a good monsoon could give a nice strong tailwind to the stock.
Do you track M&M Finance?
Yeah, I do a bit. Basically, it was hit by non-performing assets led by the rural economy not in good shape of the 2-year drought and moving towards the new norms laid out by RBI. Based on this quarter's performance and the outlook for monsoon, I think it may have a smart recovery in the second half as the repayments on the non-performing assets may indicate a very smart recovery going into the season, specifically post-harvest in the second half.
HDFC Bank, Hemindra, numbers came during market hours. Loan growth of 27%.
Yeah, because if you see in HDFC Bank, there has been the strong loan growth, which is much higher than the industry. And that is really coming from its retail segment, which is, a lot of it is being driven by auto loans, personal loans. In personal loans, of course, the yields tend to be much higher, but so is the risk. If it had been any other bank, I would have been a little cautious. But HDFC Bank has displayed that even on its retail portfolio, it has been
This
able
quarter,
to manage
by the way,
risk.
the loan growth is led by wholesale. Wholesale is up 10%, quarter on quarter.
Okay. See, a lot of these, what's been happening is that, again, this is also would be a segment which would cause me some concern if it had been another bank. Because when you're saying wholesale today, as we all know, which corporate is really borrowing? It's only cash-strapped corporates which are borrowing.
But the other way to look at it is that other banks are kind of sort of held back, constrained because of asset quality issues, etc., right?
No, that's correct.
So
my point here is
they're
that
in a position.
HDFC Bank has so far displayed a very strong risk management both on its corporate portfolio as well as on its retail portfolio. Now, the point that you are taking is that because of capital adequacy reasons, banks are not lending to the corporate sector. I would also like to tell you that the corporate sector itself is not borrowing very much because there is no demand. You're seeing that in some of the macroeconomic indicators as well as the overall credit growth in the Indian economy, whether it be even in the performance of the index of industrial production or even imports. So there has been a general slowdown in the corporate sector. But HDFC Bank has always had very premium rating because of its very adroit risk management.
Their own average for loan growth is about 23-24%, and they did 27% in the quarter. So that's something. That's quite something. Hemindra, just like to go back to you were talking about Reliance. Sushil was talking about Jio. Do you believe, I was reading a report, Deutsche Bank, I think, late last week, saying that, well, it's back to 2003 again. When you had Reliance launching their telecom operations, gaining a fair bit of market share very quickly. And incumbents, it's not as if over the years the incumbents lost market share. Bharti, if anything, has got higher market share than it ever had or has, and much more, much larger spectrum footprint as well. What's your view for not Reliance, but what it would mean for others? Any thoughts, any idea?
See, this has always been a concern, and that is also what has restricted telecom valuations in the entire sector, is what would be the impact of Reliance on the other large telecom players. Again, it's a call. Even when RCom came, in a big way, there was a significant threat posed. But as we saw that some of the large established players like Bharti Airtel, did withstand the competition. So here also, Reliance is a very large player. It is a very strong competitor. It has to be taken extremely seriously. But having said that, I think some of the other large players are also very seasoned players in the telecom industry. And they've had, a long time now to prepare for the onslaught that Reliance will bring into this sector. So it is really going to be, I think, a difficult fight to call. But I think it just should be watched. But I don't think one should underestimate either the large telecom players or Reliance for that matter.
Most of the profitability now for telcos is not, for a while now, it has not been coming through voice, right? It's data. Data is what is booming, where there is some pricing, etc. That is what Jio is essentially going to attack, right? I don't know how much you can undercut as far as pricing goes and voice, but in data, there is room. And I think, so you said it's a call that you got to take. So how do you think about that call? One way to think about it is that data margins will compress going forward, and that's essentially the growth area.
See, that is why telecom valuations...
They might not lose market share, but I'm just saying that profitability will compress 100, 200 basis points according to some.
No, that is correct. That has been the overall concern now for some quarters, that the overall profitability of this sector would come under pressure because of Reliance coming in. And therefore, the pricing on data would come down, like we saw the pricing even on voice. So data also will become commoditized. So as a result of which, the entire sector may come under pressure, and that has been the overall concern of investors. That is this a sector one should continue to be in? Regardless of who wins this fight or who dominates this fight, the overall sector may suffer because of it.
Bharti has been ranged for a long time now, right? Maybe it gets pushed out of this range one way or the other. Once you have Jio coming in, could act as a trigger one way or the other. But we don't know. As Hemindra said, it's a call that you have to take at this point in time. By the way, if you just look at the gainers, Bharti is the top one now, 2% higher. That's a 6.5 rupee move on Bharti. The constituents have changed a bit. Adani Ports is still there, 1.25% higher. Bajaj Auto is up 1%. Ambuja is up about 1%. Idea is up about 1% as well. Sushil, do you own, track Adani Port?
I own, and I own for my investors too.
Okay.
And basically, I would recommend Adani Port based if you have a 12 to 24 month outlook, because the kind of capacity they are creating on containers. Everybody looks at bulk and
just
the margin.
one thing, which is coal volumes, right? There were some comments made by the minister that we are in a position where we don't need any imports at all, coal imports at all. That is the time when imports fell. That's the time when the stock started falling as well, from 320, 330.
Let's not go by the headline that we saved 38,000 crores on coal import last year. The value of coal imported in the previous year at per ton and the last year itself would be less than half. So what you saved in terms of value, that needs to be seen, and what's the tonnage difference. Where port is concerned, port is interested in the tonnage, not in the value what we import. So if you're looking,
I'm not going by. I didn't even bring up the
I'm
value.
just trying to clarify to the point that coal
No,
imports.
my only point is if you import 100 tons of coal, right, 1 year, and next year you import 50 tons, there's only 50 tons to be handled.
Yeah, I accept that. That's the reason I highlighted container part, and I didn't go to the bulk. A bulk of 144 million tons last year, and the capacity would be operational of 200 northward. But 3.5 million containers operational last year, and the capacity being built with current acquisitions would be almost 8 million containers. Just look at the rival port company, which handles less than 1 million container, and what is their valuation today? In the vicinity of 12,000 crores. And Adani Port at current value would be less than 50,000 crores. So if you compare 8 million containers with a bulk of 144, the rival company is not even 1/10 of that company. Basically, bulk is below 4 million tons. So if you do yardsticks, it's a premium valuation of the MNC port, which is commanding that market cap with operational direction. Similar way, I think there are certain other points which do not allow Adani Port to trade at a premium or on par with any other competitor. But I think it's a matter of time. Once you see operational benefits and cash flows visible on those companies, then you give.
You're building for the future in a way.
I would say if you're looking at growth infrastructure, I'm sure that India is not going to be that export competitive based on current parameters. We want to have make an impact with Make in India and many other FDI operations, but still our exports, which are in the vicinity of 240, 250 billion ton, I don't see it at 350 billion over a period of next 2 years too. So export is not going to be there, but basically we are going to be a specialty manufacturer in very many ways, be it in generic pharma, agrochemicals, maybe agriculture-based commodities and various other parameters. So we'll start in a small way where value addition is concerned. But I see domestic traffic because of our logistic card moving to containerization between domestic ports. And all these Sagarmala and very many schemes which the government is pushing for transportation within India.
Sure.
And that would lead to a betterment, and that is visible from capex of small companies which are investing in coastal shipping.
Hemindra, any thoughts? Ports?
My main thing is that if you're expecting either domestic internal trade to increase significantly or external trade to increase significantly, then yes, then Adani Port is very strategically positioned to take advantage of that growth. Even it being the high value add of say containerization. But the point is today the entire Indian corporate sector has overcapacity. You see, that is the whole issue today, that demand really has to pick up. And if demand picks up, then the entire corporate sector in India would benefit, because there's been a case of overinvestment. For example, who would have thought that electricity demand would start decelerating? That's what we are finding, that in an energy-starved country like India, even electricity now, that the demand seems to be slowing down. So the point is, yes, if you expect that trade internal trade would pick up because of a function of growth picking up, or for whatever reason external economy or the world economy growth will pick up, then yes, Adani Port is strategically positioned to take advantage of that. However, my view is that we are going to see very flattish both global growth as well as Indian growth for some time to come.
So you're not taking that view that things will pick up, right? I mean, that's the basic
That
thought.
has been my consistent view, as you know, for last, I think, 1.5 to 2 years.
Yeah.
That I really don't see any major growth coming. The only growth we're going to come is in bubbles. And that's why, today that's the only growth one can hope for, which clearly tells you that this type of growth that you see both on the stock market as well as on the ground will not be sustainable.
Not be sustainable. Sushil, any stocks, anything you want to highlight?
See, I have a small theme. We're debating whether India will grow or not. I think in my previous interview on the channel said that R&D of India, that is R stands for Reserve Bank and D stands for Delhi. And, we've talked about from this budget, we moved away from Make in India, and Modi and the team have visited 35 countries. We've started making domestic economy a priority. So we shifted to rural.
Let me just preface that. I don't think, Hemindra, you also agree. The question is not whether India will grow, but when, right? That's the point, Hemindra.
Correct.
You're not saying, you're not ruling out growth forever. You're just saying that for the next couple of years, you don't see that happening.
Exactly, because the market believes that FY17 earnings will grow
it's
by
about timing.
17.5%.
That's what Hemindra's point is.
Yeah, but my point is if we see a stable monsoon this year, which is being forecasted, and I am assuming that the forecast stands right, and if you have vicinity of 10% plus minus on both sides, that's fine. Excessive rains or deficient rains would be a problem. And if rural economy gets to a betterment, we've enabled FDI into food processing and aggregation, that is storage area. So 35% of our food products are wastage. Hopefully within 3 to 5 years, our wastage comes down and value addition takes place. Plus domestic economy and a rural purchasing gets better. So the economy kicker means the growth in agriculture would lead to consumption. At the same time, our energy cost would be down, and all these matters would lead to a lower inflation. And a lower inflation and a lower EMI is going to make sure that government of India is kick-starting the economy with investment. So our capex would lead to a betterment.
Just one point though, broadly, do we kind of overestimate the impact of monsoon? I'm just playing the devil's advocate here. I'm no way underplaying with the importance of good rains. Surely we need it. But in the overall scheme of things, the share of farm income in agricultural income is now very small. Services is some 50%, right? I mean, farm income from the land is actually a small percentage. There are other things which constitutes the bulk of what you call agri income now, rural income rather, not agri, but rural income, yes.
450 million tons of food production, that is 250 million of grains, and 250 million tons of fruits and vegetables, and 35% wastage. This 450 having an incremental demand growth, because we are able to process and we stop importing. Today, all of us know that every second fruit what we buy in metros is an imported apple or an imported grape or some other fruit. If we are able to produce well, we sell well and we pack well, I think entire value chain within 12 to 24 months can have a difference. And my personal view is a push from agriculture would support the thought process, because our current capacity utilization as per RBI quarterly policy is always between 72 to 74. We need to head towards 80-85 before we see incremental capex done by the private sector. And unless you have a kicker within the domestic consumption, I don't think so, barring few companies, anybody is going to spend on any projects.
Hemindra, any thoughts?
See, firstly, I would just like to add that everyone, gives this indicator of 35% of food wastage in India on agriculture. Actually, in my view, that has really not been shown of which study is being cited. Because according to me, the wastage in Western countries, which supposedly have far more advanced method, is much more. Because I'll just give a standard example. You take an ordinary potato or a tomato or a tomato. The kind of wastage you have because of the standardization of the products that they want to give in the in the grocery stores, you have much higher wastage, which nobody talks about. And this, mind you, is not to forget the wastage at the consumer end who consumes is also much more. Because in India, this argument is made even by the political class which argued for FDI in agriculture, is that our wastage is very high. Actually, in my view, the wastage, if we follow this model of standardization of seeing the right size of the tomato or the right size of the potato at the final consumer end, is much higher. And India is not in a position to afford these type of high wastages. Because even in your disorganized agricultural sector, nothing is wasted. There's always a market even for a lot of these agricultural products which in the Western world would be rejected outright and straight away go into landfills. So my view is that, yes, if you have a good monsoon, I take your point that agriculture has a very small weightage of GDP, but more importantly, Prashant, the weightage in terms of employment is more than 50%. 50% of your labor is engaged in agriculture-related activities. So therefore, there is going to be an impact. But whether that will trigger an economic revival, whether that will trigger private sector capex in the economy is a big question mark. And I really don't think that even if we have a good monsoon, it would result in such a huge expansion in agricultural incomes. Because as we know, and this is what both Governor Rajan and even the Chief Economic Advisor has been saying, that agricultural wage growth has been moderated. Now, mind you, they look upon that moderation as a very positive sign, because according to them, this will result in lower inflation. I look upon that indicator as a very negative sign, because when you're saying agricultural wages are being moderated, to me, that is your future demand. If your wages are going to be much lower or the growth is going to be marginal, that means your consumption power is also going to get impacted. And unfortunately, nobody in the mainstream, discusses the demand side of this issue.
I agree with that, Hemindra. But we've talked about that many times in the past as well, and we continue to do that. 22 odd stocks higher, 28 odd stocks lower. That's the tally. I'm being told to wrap the discussion up. I just want to highlight Bharti again. It's up about 2.5%. And I just kind of sort of glanced upon this release. It was put out to the exchanges earlier today. So they've got a board meeting to consider results on the 27th of April. And they say that they are going to consider a final dividend or buyback of equity shares of the company or a combination thereof on the 27th of April. So essentially, the dividend payout is about 11-12% for Bharti. So they might keep that at the same level, increase that, or they might actually do a buyback as well. So that may be the reason why you got the stock is jumping up about 2.5-3%. TCS is up 1.5% now. Adani Port is up 1.25%. Bajaj Auto is up 1%. Idea is up 1%. So that's the top 5 gainers. And the Nifty Nifty is absolutely flat at this point in time. I had a few other questions, but I'm just completely out of time. So I'm going to wrap this up here. Thanks very much, both of you, for being here. Hemindra Hazari, appreciate it. Sushil Chokshi, thanks for being here as well.